Okay. Well, thank you very much, everybody. This is Prashant Kumar. I have a great speaker with me today. I'm going to introduce him in a second. We have a bunch of people coming in, um, and we will start. We have already started, but I still see some people coming in. So let them come in. Uh, Today we are going to talk. The presentation today is from John. I met John a couple of weeks ago, actually, and we are going to talk about what are the key things that we should consider in while we are investing outside the state. It's more of an educational presentation today. I mean, a lot of you may already be doing it. I mean, I certainly do it, but I wanted to take fresh perspective from John, how he has done what he has done in last, I would say, 1.5 years. Okay. So let me talk a little bit about myself. My name is Prashant Kumar, and I'm the uh, president of My Realty Gains. That's the name of my company. And basically, you see my presentation, right?
Yeah.
Okay. Oh, this thing doesn't seem to work well. Okay. Yeah. So just a little bit about myself. I won't bore you with my introduction. In general, I've been in technology world for last 25 years as a project manager, have worked on projects across the world, teams on multiple continents, and I do that all the time. And like 5 years ago, I realized that, these jobs are really trading your time with money. The day I stop working, that money will stop coming in. So at that time, it kind of dawned on me that I have to start building something can which can make me money while I'm sleeping. And there was nothing better I could find at that time. I jumped into real estate. So real estate is working. Your appreciation is happening even while you are basically sleeping. I started with single families, then into multifamilies, and then into syndications, all in 1 year. My primary strength is to bring value by removing redundancies in the process. So I do meticulous underwriting, and besides multifamily, I do assisted living also. We are in we are in contracts as of right now. We are in contracts on 3 deals in assisted living and 1 deal in multifamily, and we'll talk about that a little bit later. But I don't want to steal the thunder from about John. Just a little bit about myself. My website is multifamilyrealtygains.com and myrealtygains.com. I have two websites. I just like to have little technical stuff, right? And recently I created a 7-day passive investment email course, and I just like to promote that. I mean, nothing fancy. You get 7 emails in 7 days, which talk about what are the fundamental benefits of passive investing. We do multifamily, but it really talks about passive investment in real estate. So just something, if somebody wants to talk to me, schedule an appointment with me, myrealtygains.com/schedule appointment. And at any time you want to talk to me, my email address and phone number are right there. Having said that, I'm gonna I'm going to introduce John. I mean, John is a great friend of mine. We recently met, and he offered to, basically, I asked him whether he would be able to come on my webinar, and he was very excited. So I said, John, let's do it. Okay. So a little bit about John. John holds master degree, and PhD in mechanical engineering from Columbia University and Stony Brook University, respectively. He worked at Northman Grumman and Sapient before joining New York Stock Exchange in 2004 as software engineer consultant in regulation technology. John currently works in New York Stock Exchange as technology manager with risk management certification. He has flipped and staged houses in past 3 years and currently own properties property in Jericho, New York. He's the principal of OneWay Holding LLC and is now focusing on multifamily investments as both general and limited partner of 300 plus units in Virginia and Georgia. His work experience provides the skills needed for multifamily investing, including financial analysis, understanding market conditions, trends, risk, communications, and team building. He is an awesome mentor. I have talked to him so many times. He's just a great guy. John, I'm so glad that you are here. I would let you take it from here. Our goal here is to learn from you what you have done in last 2 years, how you have approached your syndication deals. You are LP and GP in many deals. We really like to know, pick your brain on, and so that our audience who are to be syndicators learn something from you. Over to you, John.
Okay, great. Thank you. Thank you, Prashant, for inviting me on. And thank you, everybody, for attending tonight. I'm going to start off. Let me share my screen.
Yeah, please feel free to share your screen. Just on top of yeah,
There we
here you
go.
go.
And then so I'll start. I have a presentation I made for tonight. So I'll start off on it. And essentially, what I'm going to talk about is what I've done the last year, especially in the multifamily space. Um, I started looking at multifamily in 2017 because at that time I flipped a house, the house I had over here in Long Island, Bayville, New York, and I flipped it. It was very profitable, but I quickly realized I couldn't repeat it. It's not really scalable, or you have to set up a large infrastructure to be able to do that. So quickly switched to was multifamily, and I'll tell you how I got into that. It was I went to a show in Las Vegas, and I happened to see Grant Cardone there. And I guess everybody knows who Grant Cardone is, especially in the multifamily real estate. But I got to read an article that he wrote, um, and all of a sudden it just made sense. Everything he talked about, the ability to scale up in investments in multifamily, the leverage you could have, and you could still generate positive cash flow. So that got me looking into multifamily. Um, and then after that, I started saying, okay, let me start looking in New York. So what I'm going to talk about tonight is the process I have about how did I get to where I did today while working full time at the New York Stock Exchange. Um, and what I want to do is I want to share my experiences with you, and maybe it's some sort of a guide, or I can give you advice, or if you ever want advice, you can more than free to contact me, and then I can show you the some of the pain points and some of the best practices that I've learned, and that I'm doing today, both as a GP and an LP. So tonight, what I wanted to talk about, just in terms of the agenda, is uh, quickly go over my background. Prashant just covered that right now, but where to begin, especially in multifamily, and especially in the New York area, and how I got out of New York. And I'm going to talk about these are some of the steps I took, kind of the path to where I got to today. And that's what I wanted to share with you. And then in the end, I'm going to, hopefully with enough time, I'm going to share a video that kind of encapsulates everything uh, that my best advice to everyone, on tonight's call. So again, we started. You said Prashant will give you a copy of the prez after tonight. So it's just come on my background. Essentially, to me, the most important thing out of all this is just the ability to analyze numbers. A couple of things here. Analyzing numbers, whether you're an engineer or a financial analyst, is the same thing. You analyze numbers, and you quickly realize that it helps you when you do the underwriting in multifamily. I had a space technology company. I started back in 1998. I have a link here in case you're interested. Again, this is nothing to do with multifamily. This is more of kind of my background, but it gives you a sense of the analytics that drove me to the multifamily. And of course, I'm still at the New York Stock Exchange. I'm hoping to leave that soon. Knock on wood. All right. So where to begin? So how did I get to here in the beginning? So let me go back. So we said back in 2017, I flipped a house. 2018, um, in 2017, I quickly realized multifamily was the place to go. I spent 2018 looking in the tri-state area. I was looking in New Jersey. I looked at Union City. I looked in Jersey City. I looked in all over Queens, Brooklyn, and Manhattan. And needless to say, and even in Long Island, although there's very few multifamily in Long Island, New York, needless to say, the numbers just didn't add up. If you wanted to do some sort of a syndication, when you do a syndication and you realize when you take to this first step, research and grow your knowledge base, all right, they tell you got to look at the numbers. There's a bunch of variables you need to take a look at. The most important is in the first step is, can I make money on this deal? Assuming it's a good deal. Do the numbers, is the deal good? And it's really about numbers and a couple of other things I'm going to describe later, and I'll show you how I got into it. So, number two here, decide the right marketing opportunity. Quickly, I realized New York was not it. I had to go outside New York. That was going to be difficult because how do you manage a property? Or that's my thinking. How do you get involved in a deal that's outside where you live? How do you do that? I quickly realized that the path I ended up taking was I had to find a mentor, a really good mentor. All right. And there's if you can go to Bigger Pockets, you'll see there's a bunch of, and you can look online, recommended mentors, who do you go with? Who do you trust? Who comes highly rated? I took this path because I realized a mentor saves you a lot of time, and I'll describe it a little bit further in the press. Once I found a mentor, all right, then as part of the team, you also need either you can build a team of your own, which is very difficult. In my case, I found in New York, or if there's a way you could become part of a team, all right, that shares the same goals as you do, which is investing outside New York, investing in the market. You're picking the right market, and is the deal a good deal? And the other thing I'm going to talk about while you're working full time is managing time efficiently. How am I doing this while working full time and you're also part of a syndication? Okay, bingo. This one, I'm going to quickly go through. Everyone knows this. Again, I put this down as part of so you can have it on the prez. But again, this is the path I took before I even found the mentor and decided to get to a mentor. Self education, a couple of podcasts, blogs that you guys can follow. Again, all of this is for your knowledge base that you're going to need eventually, because that's what drove me in a certain direction. And in among that, the self education, the direction was looking for a mentor. Okay, but besides looking for a mentor, you also have to pick this. Okay, if it's not going to be New York, the market and the opportunity. And again, everyone, I'm pretty sure on the call tonight is already familiar with a lot of this. Strong economic growth, low unemployment, all these factors, crime, which is very important. I'll talk about that later on when I go through the deals I made. Again, cap rates. And again, everyone knows this. You pick a market, you have a mentor. Okay. Mentors. Why do you want a mentor? For these reasons. All right. A lot of it in my mind is saving time, saving pain, having, instead of me having to learn on my own and go through all the pain points. To me, the most important thing with the mentor that I found incredibly valuable is you could leverage his team, you could leverage his knowledge base. He can guide you. And I have here listed out, a lot of the steps and why is it that the advantages of having a mentor. Now, how do you find a mentor? All right. And there's several ways you could do that. One is you can go find a highly recommended mentor, join a program that's going to cost you money. Essentially, that's what I did. The mentors I found, I ended up researching and I interviewed with a couple of them, and I decided, believe it or not, I picked the mentor. My mentor is a gentleman named Phil Capron. If you look him up, you'll see him. He's been on a bunch of podcasts. You'll get to know him. I can give you a little bit about background about Phil. He is a mentor in the Michael Blank program. I decided going with Michael Blank because, again, he was. I got a bunch of really, really good referrals that he's highly recommended, and he's honest. He's more of a salesman these days, from what I've seen. But he's really. But I think the whole program and the mentors they have in there are solid. And the one that I ended up going with was Phil Capron. And I give a little bit of background about Phil. He was in the Navy. He worked with the Navy SEALs, Special Warfare. He was running those boats, special boats that take the Navy SEALs on missions. The interesting thing is he left when he left the Navy. He got a real estate license, and he sold residential real estate, flipped homes, but he got into multifamily for the same reason all of us quickly realized that in multifamily space, and that is the ability to scale and get really, really high returns with lower risk. The other thing is he's hyper local in coastal Southeast Virginia. So as part of my market analysis, I started looking at, I started looking at Southeast Virginia, not the north where Washington D.C. is, or Alexandria, or other areas there, because that is very, very expensive now. That approaches New York City and the West Coast. So I focus mostly on coastal Southeast Virginia. And I'll show you some of the deals that I had gotten into there. Okay. And he was at this time, he's a full GP on 200 plus units and a joint on another 200 plus. I'm with him as a joint GP, general partner on those 200 plus units. And I'll tell you how I ended up doing the joint venture with him. So we have the market, we got the mentor, I got the mentor. Now, how do I find the deals? All right. And that's where Phil came in because when I started working with him, um, we again in the Southeast Virginia, he actually asked me to be a joint partner with him as a mentor because he saw the skills that I had and as part of the team, and we'll cover that later. What is it that you're looking for when you have a joint venture, a general partnership in a joint venture? And then the other thing is I want to talk to the other mentor I have. So Phil was good on the property side on finding deals, on being able to look at finding the deals, the team, finding a good property manager. I leveraged his knowledge on there. The other side of the equation is how do you raise capital? And that's where Hunter came in. So he was also a mentor on that side. And he has a very, it's a, he's been very, very successful. His mentor was Jeremy Roll. I don't know if you know, ever heard of Jeremy Roll, but he's a well-known multifamily syndicator. I believe he's got tens of thousands of units. He's done very well. So you're leveraging Hunter on the capital raising side. How do we do that? How do you set up a structure to be able to do that? And then that's on the one side of the equation. And on the other side of the equation, you have the properties, and then you have to link the two together. So essentially, that's what I did. I got mentors on both sides. And I'll tell you where I am with that today, a little bit later on. This is the important thing that I got from both Hunter and from Phil, which was either you could build your own team. Again, that to me, I found that very difficult being in New York, trying to do this outside. It's possible you can do it. I know of others have done it, but I was looking to do something that was, if I could, it was a way I can quickly get on board, quickly become part of a team. I didn't want, I found the approach I took was it is better to be part of many things, all right, than to try to be the main player in one of these deals.
Okay,
Because I
so that
found
sounds
that
I need to get a team.
get, oops. Anyway, as I found as you go across multiple deals, your knowledge expands because you're learning each deal is structured differently. Each deal has its own set of problems. So it was a way for me to be able to gain more and more knowledge. And that's really what my goal was personally on this.
So John,
So
John is.
I
It
became
seems
part
like,
of a team.
can I jump in a little bit, John?
Sorry. Yeah,
So
yeah.
it's
Go ahead.
yeah, it seems like the real learning from what you had was basically you became part of couple of groups, or a couple of coaching programs,
Yes,
and you were able to leverage the networking to get into deals and to
exactly.
learn the business basically. So the fundamental benefit of
Exactly.
becoming part of the networking groups or mentoring programs was to be able to do the deals within the network itself, and and
Correct.
take your
And
take your learning to
that's
the
what I
next
did.
level, right? That's what we are hearing.
Exactly. Exactly. And I'm learning today, and what I'm finding is that once you've done this, there's kind of the law that it's an unwritten rule, but they call it the law of the first deal.
Mhm.
Once you get into one, all of a sudden the second one quickly comes, and then the
Yeah.
third,
Hmm.
because you're part of a network, and you're beginning to be known out there.
Hmm.
All right, and I'm going to show you the 3 deals that I have. I did it all within the last year. Again, following again this particular path. All right, it could be a different path for others, but this was the path that I took that got me to where I was today, and is beginning to accelerate
That's a
a
very
lot of
good.
this.
That's a very
Um,
that's a very good journey, so to say. Those who are struggling, I mean, those who do not have mentors and struggling in the sense that not able to find deals and stuff like that. Uh, it's a very valid point. Then is your time important, or getting into a networking group? You can accelerate your learning and be part of a deal and expand your resume, so to say, I would think. Would you say that?
exactly. I'm kind of, and then eventually, yes, and then eventually, as this begins to accelerate, then I can leave the exchange. You know what I'm saying? I can replace that income with the
Mhm.
income from these deals.
Yes. So I
And
mean.
that's my goal. And that's what I'm, keeping my fingers crossed within the next year,
Mhm.
uh, that I should be able to leave the exchange, and then this is growing on its own. Because this is, everybody on this call knows that multifamily is the way to go in real estate. At
All
least,
right.
in
Please,
terms
yeah,
of
please
of
continue.
of
Sorry,
being
I.
able to quickly get cash flow.
Good.
Yeah. No, no, no. So I want to go back. So as part of the team, do you see this? All these are all, again. I dotted this. I put this on the pres, but this is kind of the role of. You can see how busy this slide is with the many roles and responsibilities that a team, that you as a general partner have to do. You're responsible for when you get a deal. To be able to be part of a deal. And imagine, trying to do this on your own, all this, or even with one or two people, just general partners. Again, yes, you may get more cash flow, right, from being a general partner, but but this definitely absolutely takes up a lot of your time, all of this, especially when you get to the asset management, and then the accounting, and then especially, what I didn't write here was the, what do you call it? Besides overlooking the contractors, is the, relationship with the lender, because you have to do reporting with the lender. I left that out over here. It's very important. Like, I'm finding I have to do monthly reports. You got to submit it to the lender to show them how are you tracking it per your pro forma. What are the actuals versus the pro forma? So that's another thing that's taking up a lot of that time. It probably is under asset management. All right. And then I wanted to talk about here. So now you're part of a team. If you go back, and as part of a team, certain of these are your responsibilities. All right. Like, so for example, I'm part of the asset management team. I did the financial analysis, underwriting of each deal. I did some of the raising of the capital funds. I'm actually a loan guarantor on some of these. So as part of the team, I have certain responsibilities that I still have to do today. I'm on 3, and I'll show you the deals. I'm on 3 conference calls 3 times a week, every week. And we have to review what is the status, how is the property doing? Did anything come up? Talking with the property manager that we have. So it really, really takes up a lot of my time. And one of the things that I wanted I wanted to go back was, I feel like if you go back, there's only 168 hours a week. 50 of them already is my full-time job. All right. After that, I actually spent another full-time job doing the multifamily syndication business. When you factor in everything, travel and all that, I only leave about 20 hours per week in my personal life. That's one of the points about this, is that now you're going to hit a limit with this. You cannot scale it this way. And I'll talk about that later. And the other thing is family. Family over here, you can tell right away, you're sacrificing your family. Again, the intent of this is to do a short term so that later on you have financial freedom so you can spend more and more time with your family. Okay. So you really need to manage your time efficiently. And that's what I'm doing. I wake up in the morning. First thing, besides thinking about the nicey work, I think about multifamily. Okay. What are the things I have to do? I have an agenda. You have to kind of like I said, keep a time log to see exactly, where you're spending your time. Can you run it more efficiently? What are your action items for today? Again, I kind of wrote all of this down so that you could at least take a look at this, everyone attending tonight, and say, okay, if I'm going to, do this while doing a full-time job, how do I do it? And I'm sharing you this. This is how I manage my time. Because you got to do it efficiently. You can't. I find myself getting antsy when I realize I'm wasting time. Oh my God, I get very, very nervous because I realize I should be spending. I got to do a better job of managing my time efficiently when you get to those points. But Murphy's law says if it can happen, it will happen, and that will happen. You will find time that you're not moments where you're not using your time efficiently because of some problems. But again, you just deal with it, buckle down, and then just continue. So that is again at the high level. That is exactly how I got to where I am today, and I'm going to show you now where I am today. But essentially, is again finding a mentor. You have to find a market that's outside New York. Find the mentors, and then be part of the team. Find a team. Whether you're part of a team, you could build it. But I found that it was to me, it was quicker for me to try to get in, working through the mentor to be part of a team, and then managing the time efficiently. How do I do that? Once I got these projects. So the 3 deals I got, this is the first one that I did. And it happened, we closed on this one in March. My mentor had brought me this deal. He said, what do you think about this? I looked at it and he said, do you want to be a GP on this? We need to raise capital. We need to, I could use a general partner. And I told him I would invest in it. So I actually invested in this deal as a limited partner. But this was great because leveraging, again, the market, knowing the market, certain rules of thumb that I follow. This is all part about your research, applying what you learned, right? The self-education, applying it, leverage the mentor, what he's teaching you. When we looked at this, and when I look at this, all right, you can see the first thing in my mind when I looked at this deal was the purchase price was 9 million for 104 units. Okay. And the average purchase price was 89,000 a unit. So one of the things I talk about, if you look at down here, is what they call the cost rent factor. Oops, sorry. Didn't mean to click that. This is a metric I use before we even look at going to the next level down when we look at a deal, from the GP side. And there's it's a variation of the 1% rule. Everybody knows that 1%. So we actually push it a little bit higher because we want to add margin. And this came out to about 1.23%. Again, the threshold is 1%. If I look at this right away, if I look at this, I said, this deserves to be now to get it to the next step. And now we go to the next step. And then, by then Phil already had submitted an LOI, letter of intent, and we went into contract on this in February, and we closed mid-March, right before COVID lockdown. And this was a property, and we looked at this, and we liked it. It was a really, really good deal we got. It was off market. Off market deals are very, very important because you don't want to get into a bidding war. You have other buyers that don't have a lot of experience in on market and on an on market deal, because you tend to get higher prices when they're on market. You try to get off market, and there's a reason why you want an off market deal. If anyone ever approaches you, says, "Oh, you get wind of an off market deal," definitely try to get into that. It's a great way to start. And if you need help, like I said, try to find a mentor. Try to find, again, you leverage Prashant, right? Because he's well experienced in this. Leverage somebody. Say, hey, if someone brought me this, try to, if you know an aunt, a family member. I'm going to talk about that in the next deal that I got into. The point is, off market deals, if they come to you, grab it and then look for help. I cannot emphasize that. If you go to the link and you want to see, we establish a website there that talks about, as part of being a GP and doing transparency with investors and trying to show, where are we with the property. We actually created a website for this property so that people can come and take a look at what it looks like, and how it's proceeding and how we're doing with it. Again, it's all about transparency. This deal is has been a solid deal. And again, we closed in March. So now this is the 7th month. And we were actually able to make distributions this year. We held off until after the end of COVID, and we did our first distribution to the investors in September. This was a solid deal. Again, this one I got, again, because of my mentor. I got in with it, and we shared a lot of the responsibilities. The team on this is a rather large team. We had 7 people as part of the GP. So again, I'm not greedy. I got a smaller cut. I think my percentage on this one is about 12% of the GP, but I also invested as an LP. So I'm getting kind of the best of both worlds. But Phil, as you see, Phil, he was the lead sponsor, and so was Darren. Darren is he's a contractor. So he's actually part of the renovations that we're doing on this right now. And then the other principals, Chris Roberts, Paul Wilcox, Anthony, you're going to see these names later on. So this formed the GP, okay, for this deal. The second deal I got wind of, you're going to laugh at this one. This one is in Savannah, and I just came from there on Monday. Came back Monday because I went to visit a property. This one was a little bit worse condition. It's a value add, okay, but this one was an off-market deal, and it was brought by Chris Roberts. He got wind of this through a friend of his, right? A friend of his who knew a broker that had this. Sorry, let me go this way. This one, all right, which was a self-managed. It was this one was run by an 80-year-old 80-year-old woman who was collecting rents, very, very low rents, for many, many years, since 1983. And the opportunity, as you can see in this, when we got this one, was, again, deferred maintenance. The rents were $400 below market, and they weren't raised like in the last 10 years. She was getting, this is 112 units, and they were getting $550 a door in a market that's $950, Savannah, Georgia. Again, this is an off-market deal, and it was found by one of my general partners. Because of the relationship I have with them, again, these are, if you see here, the metrics, cost rent factor. Again, the rents are very, very low. And these are all it's 112 units, and they're all 2-bedroom units. This one, again, it's going to require more work because there's a lot of deferred maintenance. But this one, after we vetted it, first on the price and then looking at, doing the due diligence, this one was worth jumping into. And again, I joined this one. They asked me, the team, Chris Roberts, who was also in the other deal, the one I showed you previous, Anthony, Paul, I got in. They wanted me under this. I said, sure, I'd love to do this. Oops. Here we go. Sorry. Let me go back. Huh? Did I lose you?
John, can you start presenting again? I think by
Yeah.
mistake. Yeah.
What happened? I wonder what happened. Let me try this again.
Just share again, please.
Yeah, I lost you. Hi, hold on. Oh, I got it. Got it.
I think that was my mistake.
Oh, that's all right.
I was playing with
Yeah.
you, but since we are
All right, no problem. All right, excellent. Okay, so let me go back to this one. There we go. Okay, so how did I get into the second deal? Again, as a general partner. This one again was networking, and again these gentlemen over here these are my new general partners on this deal. But you'll notice again several of the names when you see the pres. You'll see these names. We all got together. Chris found this property and he brought us in. He asked us to come in on this deal, on the Savannah deal, 112 units. And you can see Chris is actually Sterling Rent Capital is actually growing, is growing very, very fast. He's doing very, very well. He's been doing a lot of podcasts. I haven't had time to do those, but he's been doing a bunch of them. Same thing with Paul. Again, all these people, they're all hungry. And again, they're leveraging, kind of doing the same model I'm doing, which is being a general partner on these deals. After this one, so the Savannah one, I kind of wanted to show you why, as part of the vetting, if you look over here, you can see everything in the blue is a high income area. And we're looking at, 88,000 to over 100,000. This is the Savannah area. Here's downtown Savannah. The property is right here. So you can see there's kind of like a blue wave. There's a lot of business. They're going to be. There are a lot of business initiatives that are happening here. That was one of the reasons that we ended up buying this property. And in addition to that, one of the things I learned is being the GP. Our GP is a relationship with City Hall. They want to be able to, if you have a very, very tight relationship with City Hall, because they've been looking in, they want this area. Again, they want business investment to come into this area, and it is. They wanted us to be able to take over this property, turn it around. We'll be able to increase the rents and then make this a good living for people to move into or even stay in. There's a lot of people there that are staying. I went there. I met the tenants. A lot of the tenants, very, very nice people. There are a few undesirables. As part of the GP, I learned, you have to deal with that, and there are mechanisms in place for you to be able to do that. After this deal, as part of the general partnership, bang! This is the third one I got, and we just closed on this in early October. So within the span of a year, or I would say, about a year, I would say closer to 10 months, I was able to get into 3 deals as a general partner and a limited partner, all because because of the path I took, which is leveraging the mentor, the network, the relationships, and being able to build trust and being able to offer, something as part of the team. Because when you build a team, you want to make sure you complement each other. Certain GPs have certain strengths in each of the roles and responsibilities I'd shown earlier. This one, I got into with Phil, my mentor, and this is a 92 unit deal. So the total is 308 units I got involved with. All right, and again, right away, right from the beginning, $67,000 a door. Again, I use that cost rent, that monthly factor, the cost rent price per door. Again, 1.2% above the 1%. And the rents in the area are $900 to $1,000. And right now we're at about $800. So this definitely has upside. And the units here, this is a solid building. It was built in 1938. It's a very and actually the units here are actually even better condition than the Marina one in Chesapeake I had shown you earlier. So again, 3 deals within a year, leveraging the relationships in the partnerships that we have as a GP and LP. Again, and this is the GP team. You recognize Phil. There's Anthony again, and then there's these are 2 new people I met as part of the principals, and again, where now that we know them, I network them. So we're going to be kind of like sharing if we find off market deals, we'll be able to say, hey, who wants to be part of this? Can we raise capital? So it's all networking. It's really crucial of this. And this all started again because of the approach I took. So I'm doing all this. So I have 3 deals while working full time. And you got to learn to manage your time efficiently. All right. Before I get to the last slide, should I ask questions now or wait a few more minutes?
Guys, anybody has any questions, feel free to ask any questions. I mean, John, to me, it was super helpful that, you are a living example of what people can do if you have the desire. I know there are a bunch of people. I mean, I know a lot of people, who have been looking for deals, but they're not able to find deals and they struggle and whatnot. And within a year's time, within 10 months time period, you were able to get into 3 deals. That is awesome. That is incredible. I mean, all because you took step, you took step, you
Oh,
enroll yourself into various networking groups. That is super awesome.
I know for a fact, well, a couple of things. One is sometimes I feel I've been very, very lucky. The one thing I do remember was, I don't know if people on the call remember, there was a football coach. He died. He used to coach the Dallas Cowboys, Tom Landry. And I never forget, he said something that stuck in my mind, which is luck is the residue of design. And that always stuck in my head. And that's why I'm looking at the approach I took. And I think leveraging, getting to know people, leveraging them, being able to offer something that they can use and it become part of a team. That was the approach I took. And like I said, I didn't want to be greedy. So I said, you know what, it's better, to be part, get a piece of it, of many, many deals, than trying to get just 1 or 2 deals. I found that's my personal opinion is what I found most valuable, because each deal has its own unique set of problems, unique set of circumstances, and it helps you to acquire even more knowledge, and you be able to be able to see, you come across another property, you can say, this one's very similar to that one, and you could deal with it that way. Again, a lot of these guys, some of these guys like Connor down here, he's new, he started out. All right. So we brought him on and this is his first, I believe his first as a general partner. And he's actually in the Navy and he's on submarine duty, Connor. But again, these are all very diverse people, but they all share the same thing, which is being able to, focus, find, leverage a network, and being able to, again, you do your research, learn as much as you can, listen to others that have been there, that you want to follow their path, because that's what I'm doing. I can tell you right now, while working full time, I've been able to do this, and I've been, like I said, I've been blessed that I've gotten as far as this way. But I'm hoping, but now things are accelerating now. Things, because now I'm meeting other people and they've been contacting me. So I think, like I said, things are growing. Being a GP, I think, I'm going to hold off on that now because I want to focus more on the capital raising side.
Yeah,
Because
Ben Spader is asking what is the best way to find out about these deals and invest in them.
The best way to find out about these deals, um, the best, seriously, my thing is if you could find the way, the way I would do it, if you have no knowledge of this, again, try to find someone, get in contact with someone, a mentorish. You may not have to pay for it, or
I
maybe,
think
like I said, you have to. They're the ones that really. You could try to find these deals off market. There are some tools like I think it was a Reality was one. Another one is CoStar because
Reonomy.
Reonomy. That's it.
Yeah. No, I
That was
think
it.
I think Ben is asking from an LP standpoint. If I'm correct me, Ben, if I'm wrong. He's asking best way to find out about these deals and invest in them. He's not talking about
Oh, being a GP or
yeah,
being a part G. Yeah, being an LP. I guess. Uh, There's you could search on the web. You could put referrals out there. Definitely Bigger Pockets. If you go to Bigger Pockets, is a great site. Also on the web, you can look up multifamily syndicators. There is a
yes.
list. I do have a list that I actually created. I should have made a part of the press. I think I originally had it in another one.
So what I would say, I would answer Ben's question. See, finding these deals is also part of networking, right?
Yeah,
I mean, I know we are in COVID situation, but there are a lot of webinars going on all the time. There are a lot of syndicators, websites are out there.
and you could sign up.
You can just sign up for their newsletters.
Yes,
And the next thing you will know, you will have 50 emails in your inbox in the update portion
yes,
every day. And then you will see that maybe five of them are uh, webinar about their deals. So
exactly.
that way, that is one way. And you need one or two deals, right? I mean, you will definitely find deals in those. That's how I get to know about all what's going on in the market. You just go spend like 3 hours on a Saturday and go from one website to another website to another website and just sign up for all the newsletters, for all the 20, 30, 40 syndicators,
Correct.
and you'll
So
start getting their newsletters, and that's how you will find basically these deals.
yeah, if you go back to one of the previous slides to talk about self education and research.
Yeah.
Exactly. That
So
there's a
let
lot of information out there, and believe it or not, there's sponsors are looking for capital.
Yeah, so let's look at a couple of other questions. Lam is asking about as GP, how much skin in the game did you put in for the 12% excluding LP investment, or was that 12% just for the loan guarantor?
Oh no, that was the split was, I forgot what it was, but essentially I was part loan guarantor. I was going to do some of the asset management. I did some of the capital raising. What we did essentially was there was a spreadsheet, and then what you do in the GPs, you partition, you ratio out. Like, here's a GP, 30% goes to capital raise, and then you split that up depending who brings in, the money. Then there's another one who's going to do the asset management. They get another 20% of the GP, and then you break that up. So you can. That's a good question, because actually I should give you what we did, what I did on these three deals. You could break up, who's going to do the investors relationships, who's going to send out the newsletter. So there's a certain piece of the GP that gets, partitioned out for that, and it all adds up to 100%. So I believe there's like 6 or 7 roles, and they each get divvied up among 100% of the GP, and then that's how you find out how much of the GP you have. So
John,
like
if
that,
it is okay for you to share that, I mean, you can send
sure,
it to me. I can send it to the group.
yeah,
Feel free, so
yeah,
that way everybody will understand what you are talking about. But there's
sure,
another question, and I'm just just watching the time. That's why I'm picking up few more questions quickly.
sure,
What are some of the things you consider when choosing what state to invest in? Also, what are some hot states that you think
yeah,
will be hot market, especially after COVID?
yeah. Let me show you this. So let me go back to this slide. Come on. right here. So this one. So what you do is what I did was you create a spreadsheet, all right, and you put these factors down. And then what you start doing, you start looking. I started looking outside New York, and I started looking at, and there's reports that are given out. I can give you a list of all the news reports and market reports published by like the big commercial real estate broker firms. Another good one is IRR. I can give you a list. Prashant, you can write that.
Yeah.
I'll also give that.
Okay.
And what it does is it tells you what has been the areas with the greatest economic growth, the greatest migration of people. Like the two things, and it still hasn't changed. Uh, Two big demographics that we're seeing is one is the millennials going into renting and the baby boomers that are retiring. Right? They don't want to own. They don't want to own real estate anymore. They just want to rent. And they have to worry about like I do. You have to worry about the property, and those are the two big demographics that we're seeing, and people are migrating. People are leaving New York and California, high taxes, and so they're migrating out also, and they're going into areas, and you can track that. You can track that in these reports. I'm going to I'll give a list of what I used and what others have used, so that you get a sense that when you fill out the spreadsheet and you put each of these factors in, you could assign, here's a state and in which cities in the state in each area you think is going to be the
So
most
what
promise.
places do you think would be good? I mean, for let's
Okay,
talk
so
about final results.
so let me show you. So I picked Virginia, Southeast Virginia. If
Okay.
you look at it, it's a very very good. It's growing. It's like a very well known. I should say that well kept secret, because
Mhm,
a lot of the multifamily have been going to where the jobs are and all that, which is North Carolina.
mhm,
Typical the Research Triangle, Raleigh. You
mhm.
have Charlotte. And I forgot what the other big city is in North Carolina, but North Carolina is big. A lot of money's flowing in there. A lot of money was flowing into Northern Virginia. Okay. But not Southeast Virginia. And believe it, and now money's beginning. Well, I'm seeing now money coming into there
Mhm.
because I'm seeing uh, deals that are being bid up higher that now don't make sense. And that's unfortunately that's a side effect of when you have money flowing from one area to another. Another one is Huntsville, Alabama.
Mhm.
Tennessee. I see Memphis,
Mhm.
but Memphis is the problem with Memphis is the same problem with Baltimore. City Hall, it's crime, and Baltimore is not as landlord friendly as the other places.
Mhm.
Memphis has a very very high crime rate.
Mhm.
So Memphis is almost, yeah, you really need boots on the ground in Memphis, because that you're talking about 6 to 8 blocks. Within 6 to 8 blocks, it could be like no man's land. And
Yeah.
then you come across a really, really nice property. And then again, so Tennessee would be more of like Nashville, very, very good area. But again, money's going there, the cap rates, it's going to become more expensive. Utah, again, money from California, Idaho, Utah, it was going into Arizona now, Phoenix.
Mhm.
Texas, everybody knows Texas is amazing because there's so many multifamily syndicators there, so many different ones I know, and a lot of them are still making money. There's so many deals being done there, but again, it's becoming more expensive. They're getting
Don't
down to Class A and
I like
B.
in the last slide that you have that video. I would like that to
Yeah,
for you to show that to everybody so that you know
yeah.
that's
So
a very good
yeah,
point to
so
have.
yeah,
Yeah.
yeah. So yeah, to answer the question, so Georgia is another place, South Carolina, Southeast Virginia, North Carolina, Kentucky, and Indiana, which I know Prashant. That's why Indiana is another place I'm
I,
seeing.
I I love Indiana. I have a property there for last two. I hold a property there right now, and I'm in a contract on another property next to the same next to the earlier property. I don't have a pitch deck yet, otherwise I would have shown it. But maybe I'll show one or two pictures just as a teaser. I'm in contract and due diligence right now, basically on that. I
Oklahoma
just love Indianapolis. I
and
just love that area.
Oklahoma, Iowa. I'm seeing so I think you get the gist of it. Those areas, kind of middle America
Mhm.
and the Southeast and parts of the Southwest. All right. So I wanted to leave off because this thing always stuck in my mind. I wanted to share with you. I took these two videos. What happened was I did this in Utah. And to me, the most important advice I can give everyone on the call today is, besides, again, educating yourself, doing the research, is in my case, when I get a mentor and others that have completed, is I listen to them and I I do exactly what they recommend and what they've done, because that way I believe I will become successful. What I did, let me tell you a quick story here. This was my significant other. She wanted to do an ATV, an all-terrain vehicle in the dunes, and this is in St. George, Utah. And we signed up. She signed us up for one afternoon, 2-hour drive on an ATV, the three of us, her daughter, her, and myself. And it was a husband and wife who owned this ATV business, being able to take tourists and take them for drives on this. So when we signed up, I thought we were going to split up. It was a husband and wife, one in each of the car driving us, and we would enjoy the ride. The funny thing was, both of them got into one and they left the three of us in the other. And I was going to drive this. And I never drove it before. I have no idea. And I got scared. I was like, well, yeah, I got scared. I was apprehensive. I'm like, and I said to her, honey, he says, I don't have a damn clue how to do this. And the husband, the owner, he said to me, he says, listen, he says, just just follow exactly what I do. All right. Remember, when we get to a vertical wall or we get to a big dune, gun it. He said, just gun it and control it. That's it. Don't do anything like try to be like he said. A lot of younger people, younger guys have actually flipped these things, because they didn't follow what he said. And of course, I have two family members in the car. There was no way I was, I said, you got it. I'll just follow you. You lead the way. So I just wanted to share this video because this one here, we got to a 30-foot. This is the 30-foot rock. Look at him. So he goes up. That's a 30-foot climb. He went straight up. Okay, so we got over that. And then this one was even a bigger one. And he told me, gun it. So it was like that for 2 hours. We were doing some crazy things. But the thing is, and we had a lot of fun. But the point is, I did exactly what he told me to do. And I didn't deviate. Now, me being an engineer, I realized these things were designed. They're not going to flip if you do what you're supposed to do. And that's what I wanted to tell you, that the most important thing is follow others. Do exactly what they tell you to do, because they want you to be successful too. I want you to be successful. All right. And when you do this. So like I said, I wanted to leave off at this with this video, just to show you it was scary, but we did it. And that's what I'm doing today. I'm just going to keep going forward, not stopping.
Very good, John. Very good.
Huh?
That is just an awesome presentation, John.
Hanging out with them?
Just hold on for a second. I think somebody is talking. Guys, can you put yourself on mute? I mean, to me, this is one of the good, best presentations. Not from like content perspective, is from a real life experience perspective, right? I mean,
Yeah.
you're talking to a guy who has done such a great job in last 1 year, and he's sharing his experience. So this is something that all of us can follow in our lives to become better, to do what we really want to do. I know a bunch of people even on this call who have been looking for deals but not able to find for whatever reason. So there's clear path. John has
Yeah.
laid out a clear path in front of you. Networking finding a mentor and do and follow the path. That's it. Have the blinders on and just follow the path, straight.
Exactly.
It's
Don't.
so important. I know we have spent a lot of time. I mean, I have spent a lot of time. I mean, and knock on the wood, I would say I've been successful because I've been following the path myself also. And it's not about me today. It's all about John. John, we really appreciate you coming on board today.
Yeah.
Um, um, uh,
Thank you.
yeah, no, you are very welcome. I mean, I just want to take like 30 seconds. Um, yeah, now somebody says, so Sonia is saying now we need a list of mentors too.
Oh, yeah. Yeah.
Yeah, so
Whatever. Yeah. Prashant, you
yeah,
let me know. I'll write up those lists, whatever
yeah,
you need.
okay,
Okay. And like I said, if anyone's looking for deals, if anyone's looking for,
yeah,
like I said, that's why, we have, I joined this call
yep,
and I joined this group. I'm looking essentially right now. I'm just looking to build right now a fund, essentially fund
yeah,
focus on the LP
talk
side.
about that. We'll talk about that in your
Yeah.
next call. We'll
Yeah.
bring you on, John. And
Yeah.
I know, bunch of things, I'm talking to you because we will
Yeah.
start talking about it. It'll go for another 15 minutes.
Yeah.
But I'll take only 1 minute, guys. And those who have been here, I just want to share what I have right now. I'm in a deal. I mean, when I say we are in a deal in Indianapolis that we were talking about earlier, right? This is a deal that I have, which I just got into. I don't even have a slide deck, to be frank with you. It's 89 units in Indianapolis, value add, and I have a 72 units right next door. So for me, buying this is just no brainer because I have a great team on the ground, existing property manager. Um, uh, and John, if you want to type your contact information in the
Yeah.
chat window, that would be great. Yeah,
Yeah.
you are
I'll do
typing
it.
it. Okay.
Yeah, I'll do it
So,
right now.
so this is a 89 unit that I'm buying. We are buying basically as a syndication. It's a value add. Rents are under market. Awesome deal. If you look at it, half of it has been upgraded, but the current operator is not able to take it further because he doesn't have the economy of scale. His strength is southeast. He had bought this in Indianapolis thinking that he would be able to turn it around. So he's having tough time. So we are just getting in to help him out. Not help him out. We are purchasing the asset, and and this is next to a hospital. I mean, next to a hospital, next to a golf course. Um, Very good value add opportunity basically for us. So I don't have too much data about this right now. What I will share though is just a little bit of numbers, and I can share more information later on. um, we are buying it at 3.2 million, and the rental income has huge potential upside. 18 months 18 months transition period, $400,000 of capital expenditure, and that should give our syndication, I mean, 18 months to stabilize it up to 92% occupancy, and investor cash on cash is regular investor cash on cash is about 9.2%. Investor IRR is 16 in a 5-year period. I think it is 1.95x, something like that. We just got into the deal, but we have not done. I'm not created the presentation or anything like that. Just wanted to bring it to everybody's attention. Those who are listening, I'm not raising any money here, but sharing a deal that we have. Is a deal that next to a deal which we are part of. I mean, which I own personally. Actually, that one is not even syndicated. So I just wanted to share that. If anybody needs any information about that, I will, feel free to reach out to me. Again, as I said, my email address is prashant at myrealtygains.com. And if you go to go to my website, myrealtygains.com. Feel free to subscribe to a 7-day newsletter, not newsletter, 7-day passive investment course, free, of course. And schedule a call with me if you want to talk to me. Any information, we are here to help. Of course, there's no selling or anything. We don't have course or anything. We just get together as a webinar, you know. We just get together as an educational webinar. So I gave you my email address, and this is my cell phone number, 631-428-6479. That's all I have. Any last word? Anybody has anything they want to talk about?
Thanks for hosting it.
All right. No worries at all. No worries at all. And I will try to, send some of the information back to everybody, those who are on this call today. Thank you so much for joining, everybody. Dr. Land, thank you so much. Dinesh, thank you. Christine, Gustavo, Ben, good to see you, buddy. Sonia, Maz, guys, Teresa, appreciate you guys joining. Anthony, thank you. Yes. Anything else,
right.
John? Any last words?
No, that was it.
We are
It's,
good. All right. Thank you, guys. Good night.
All right. Thanks,
Bye.
John. Have a good one, guys.
All
Yeah.
right, thank
Thanks,
you.
guys.
Thank you, everybody.
Thanks.
Bye.
Bye.
Very welcome. Very
Pleasure.
welcome. Thanks for your time. John, just hang on.